Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. 2024 was a big year for investors. Local and global markets hit new records, so too gold and Bitcoin. So what does 2025 hold for investors? As always, this is general information only, and you should seek independent advice before making investment decisions. Grady Wulff is a market analyst at Bell Direct. Grady, welcome back to Fear and Greed.
Thanks for having me.
So what were the highlights of the last 12 months before we get into the next 12 months? What highlights for 2024?
Yeah, it's been a pretty interesting year. Obviously, inflation drivers have started to ease, which is a great thing. Interest rate cuts are on the horizon, or they have been happening in the US, and obviously in Australia, they're hopefully on the horizon. But we've had retail strength, which absolutely surprised the market because apparently Australians kept all their COVID money in their pockets. So now we've seen that finally running out as retail spend eases, but that boded well for our retailers and consumer discretionary stocks. Then obviously we have the Trump election, which really put a spanner in the works for all markets around the world. And locally, we've seen the ASX at record highs. So a lot of things have been at play, but I think the biggest tale as well was China. China expected comeback in last year, expected recovery this year. It just hasn't happened yet. So what we need to see is the recovery next year for all our big iron ore miners and our miners out there. So a lot of play this year, but it's been a very big year.
Okay, so the next 12 months, what are you looking for?
I'm looking for inflationary drivers continuing to ease. So the ones that remain sticky in Australia were wages, price inflation, services inflation, input cost inflation, retail spend, as I said, has started to come down. But those were all the key drivers. Housing inflation is one that isn't likely to come down anytime soon. So we've got a bit of a trouble there for the RBA because immigration's really high at the moment. And obviously that puts pressure on our housing crisis. So that's one that I think the RBA is not going to quite consider when it comes to the interest rate outlook. But I'm waiting for inflationary pressures to come down. So what we're expecting is a cut from the RBA, hopefully mid next year, but I don't want to get too optimistic because as we saw in the last week, we had the Fed cut their outlook for interest rate cuts next year from 4 to 2, and markets responded very negatively. So that just goes to show that markets are so reactive and responsive to news and noise in the markets and any rate outlook. So it's a very rate-driven market right now. Otherwise, next year, I'm also looking for copper is our kind of commodity of the minute at the moment. So copper demand at the moment is growing, and there's an undersupply of short-term producers. So there's not enough production. There's not enough miners out there producing high-grade copper to meet this demand increase over the next few years. So the thing to know about copper mines is it takes about 17 years to get a copper mine up and running and producing, compared to lithium, which is about 4 years. So at the moment, we obviously have the lithium price down at the moment, and that's looking to be subdued for the next few years. But copper, on the other hand, is looking to increase because its use is extensive in the green energy transition. So we do expect to see an uplift in copper and demand for copper. So that will put a lot of our miners on the forefront of investors' minds next year. We also are looking for the tech sector. Obviously, the tech sector had the biggest run of 2024. I think it ended up about 58%. So that was insane. But there is still room to grow because, as we saw recently, Broadcom's results came out, and they're one of the chip makers I think it's in Asia, and their outlook is really strong, and they've still got growth on the horizon. So that says there's more room to grow because the semiconductor space, AI space is not going anywhere or getting any smaller anytime soon. So that really drives tailwinds for the sector. So I see potential growth up there. The financials are one area I'll be keeping an eye on as well because obviously our big banks, every investors treated them as a safe haven asset in 2024. So naturally the valuations are just simply overvalued across the board. So I think what we'll see is people won't sell the banks, but I don't see as much drive coming to the banks. We saw net interest margin peaked as well, and we're obviously expecting rate cuts on the horizon, which doesn't bode well for all of our big banks. So again, we're expecting a bit of a pullback in the financial sector. And another area, the final area I'm looking at is M&A activity because this year, we saw a lot of M&A activity from the big miners into smaller miners and green energy transition exposure. So Rio obviously into lithium, BHP into copper. And just across the board, we're seeing all these big names, like even JB Hi-Fi is acquiring ENS, a 75% stake in ENS. So we're seeing a lot of exposure and a lot of M&A activity. So I expect a lot more of that will be on the horizon next year with the lack of IPOs at the moment. So I think the big players are looking to scoop up the little players and really expand their portfolios and revenue drivers.
Fantastic, Grady. Thank you for your time this morning.
Thanks so much for having me.
That was Grady Wulff, market analyst at Bell Direct. Remember to get your own independent advice before making decisions. This is Fear and Greed Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fear and greed. I'm Sean Aylmer. Enjoy your day.